Why the rich never work for money while everyone else chases paychecks. Every morning, millions of people wake up and begin the same routine, working for money. They follow a path laid out generations ago, a cycle that feels like the natural order of life: wake up, commute, perform duties, return home, and repeat. It is a world governed by the alarm clock, where one's contribution is measured by the hours spent at a desk or on a factory floor. They trade their time, energy, and freedom for a paycheck. This transaction is the cornerstone of the traditional middle-class existence, where the ultimate goal is to exchange the most valuable asset any human possesses, their limited time on this planet, for a finite, fixed amount of currency that barely covers the cost of survival. Most people spend decades chasing income, believing harder work is the answer. They subscribe to the school of thought that says if you stay late, take on more responsibilities, and chase the next promotion, you will eventually reach a state of comfort. Yet, for many, the finish line only seems to move further away, leaving them exhausted and trapped on an endless treadmill. Every month revolves around one important date: payday. For the vast majority, their entire life, their stress levels, and their capacity to plan for the future are held captive by the timing of their employer's payroll. They live in a state of perpetual anticipation, waiting for the deposit that merely resets the cycle for another 30 days. When money runs low, anxiety rises. This creates a psychological trap where the fear of scarcity prevents long-term thinking. When you are constantly worried about how to pay next month's rent, it becomes nearly impossible to dedicate the mental bandwidth required to learn about investing, entrepreneurship, or financial independence. But somewhere else, another person is earning money without going to work. While the rest of the world is trading hours, this individual has spent their time building something different. They are part of a quiet, often invisible class of people who have mastered the mechanics of money, allowing them to break the link between their presence and their profit. Their income continues flowing whether they are awake or asleep. This is the ultimate goal: financial velocity that operates independently of physical effort. Whether they are traveling, sleeping, or enjoying time with family, their systems of wealth are busy generating value and capturing returns, essentially turning time into a multiplier rather than a cost. The difference isn't how hard they work. It's how they think about money. The wealthy do not necessarily have more hours in the day, nor are they inherently more talented. They simply view money as a tool that needs to be deployed to work, rather than a trophy to be earned and immediately spent on fleeting comforts. Most people are taught to work for money from a very young age. From the time we are in school, we are conditioned to believe that getting a good job is the highest form of achievement. We are trained to be excellent employees, obedient workers, and diligent consumers, but we are rarely taught how to be owners or investors. The wealthy learn something entirely different. Behind closed doors, within families that sustain prosperity across generations, the conversation is never about finding a job. It is about identifying value, managing capital, and understanding the difference between earning an income and building a net worth. They learn how to make money work for them. This shift in perspective is the most important milestone in one's financial life. It is the realization that money, if managed correctly, can be a soldier that goes out into the world to capture more money, creating a self-sustaining army of capital. Employees exchange hours for dollars. In this model, you are limited by the number of hours you have in a week. Even if you are the highest paid professional in the world, your income is still mathematically capped. You cannot work 1,000 hours a week, and therefore, your potential for growth is severely stunted. And time creates a hard limit on income. When your income is tied to your physical presence, you have essentially traded your freedom for security. Once you stop working, the money stops flowing, which keeps the vast majority of people tethered to their jobs long past the point where they are happy or healthy. Business owners build systems that generate income beyond their own labor. They understand that to truly scale, they must hire talent, implement technology, and design processes that allow the business to function without them. They are in the business of building engines, not just filling roles. A strong business earns money through people, processes, and value creation. It is a mechanism for solving problems at scale. The more effectively a business solves these problems for a large number of people, the more it compensates the owner, independent of the owner's manual labor. Real estate investors earn from assets they own. They leverage the power of tangible property, collecting rent from tenants who are effectively paying down the owner's debt and increasing their equity, all while the value of the land itself tends to rise over time due to inflation and demand. Stock investors benefit from businesses operating around the world. By purchasing shares in companies, they become part owners in global enterprises. They get to participate in the success of the world's most innovative teams, receiving dividends and watching their wealth grow as these companies expand their global footprints. Their capital works around the clock. While the individual is at the dinner table, their stocks are trading in international markets, their real estate is appreciating in value, and their business systems are serving customers in different time zones. Their wealth is constantly moving, constantly growing, and constantly compounding. Many people spend income on things that decrease in value. They buy cars, gadgets, and luxury goods that lose 20% of their value the moment they leave the store. They are caught in a cycle of keeping up, trading their hard-earned money for items that require further maintenance and do not pay them a single cent in return. The wealthy focus on buying assets instead. They understand the definition of an asset, something that puts money into your pocket, month after month, year after year. They prioritize the accumulation of cash-flowing investments over the purchase of depreciating status symbols. Assets put money into your pocket. This could be a business that yields dividends, a rental property that provides positive cash flow, or intellectual property that generates royalties. These are the building blocks of true financial security, creating an income floor that exists regardless of your employment status. Liabilities take money out of your pocket. This includes high-interest credit card debt, car loans, and expensive lifestyles that rely on consumer credit. If it costs you money to keep, it is not an asset, it is a weight around your neck that pulls you deeper into the cycle of dependency. Even small investments can become powerful over time. You do not need $1 million to start. You need discipline. A few $100s invested consistently, month after month, is the seed that grows into a mighty oak, provided you have the patience to let the process work. This is the power of compounding. Albert Einstein reportedly called it the eighth wonder of the world. It is the mathematical magic where your money earns interest, and then that interest earns interest, growing exponentially rather than linearly. It is the closest thing to a financial superpower. Growth builds upon growth until wealth accelerates. The early years of investing are often the hardest because the growth seems invisible. But once you cross a certain threshold, the speed at which your wealth increases becomes breathtaking, eventually outpacing even your highest annual salary. The rich rarely ask how to earn more money. That is a tactical question with a limited upside. Instead, they look at the world through a lens of leverage. They ask how they can optimize their existing resources to create the maximum amount of output with the minimum amount of ongoing effort. Instead, they ask how to create more value. They know that money is just a receipt for value provided to society. If you want more money, you must find a way to provide more value, to solve a larger problem, or to reach more people with your solution. Value attracts customers, and customers create income. This is the universal law of economics. Whether you are a solo entrepreneur or a corporate titan, your wealth is a direct reflection of the value you contribute to the marketplace. The more people you help, the more your systems are rewarded. Financial education becomes a major advantage. It is the difference between a gambler and a strategist. By understanding tax codes, debt structures, and market cycles, the wealthy ensure they keep more of what they earn and grow it more efficiently than the average person who leaves their money in a stagnant savings account. Knowledge helps them recognize opportunities others miss. While the herd is panicking during a market downturn, the educated investor sees a clearance sale on high-quality assets. Knowledge allows them to remain calm when others are emotional, turning moments of crisis into moments of immense growth. Wealth often begins with different decisions. It is not about a sudden windfall or winning the lottery. It is about the choice to prioritize your future self over your current desires. It is the small no to an unnecessary purchase that becomes a yes to a foundational asset. Small choices repeated consistently create huge differences. Life is the sum of our habits. By consistently choosing to allocate a portion of every paycheck toward an asset, you are slowly shifting your reality, bit by bit, until you reach a point of no return. Most people fear risk. They are taught that the stock market is a gamble or that business is dangerous. This fear keeps them trapped in the safe zone of a traditional job, which ironically is one of the riskiest positions to be in, because you have no control over your own destiny. Successful investors learn how to manage risk. They do not avoid risk entirely, they calculate it. They learn how to hedge their bets, how to protect their downside, and how to stay in the game long enough to win. They understand that the biggest risk of all is doing nothing and staying the same. They diversify their sources of income. They do not rely on one company, one salary, or one industry. They spread their capital across different buckets, ensuring that if one sector suffers, others will continue to produce, protecting their overall stability. Multiple streams create financial stability. It is the difference between standing on one leg and standing on four. With multiple streams of income, you have redundancy, which gives you the confidence to take bold risks in other areas of your life because you know your foundation is secure. Depending on a single paycheck can be dangerous. It is the ultimate vulnerability. If that one source of income vanishes, your entire lifestyle is at risk. True freedom requires that you build a bridge to a different way of existing, where you are the master of your own supply chain. Assets provide income from many directions. When you have a diverse portfolio of assets, your financial life becomes a garden that you tend to, rather than a race that you are forced to run. You can prune, harvest, and plant new seeds whenever you want. The results may not appear immediately. This is where most people quit. They want instant gratification. But the building of wealth is a long-term game, a test of character and persistence that separates those who want to be rich from those who want to build wealth that lasts. But time reveals the difference. Look at the person who spent their 20s buying assets versus the person who spent their 20s buying luxury goods. 10 years later, the difference in their quality of life, their options, and their peace of mind is undeniable. One person remains dependent on active work. They are still tied to the clock, still praying for a raise, and still worried about their boss. They have more stuff, but they have less freedom. They are richer in possessions but poorer in potential. The other lives from income generated by assets. They have unlocked the gate. They have achieved the ability to choose how they spend their days. Their life is no longer about survival, it is about contribution, exploration, and the pursuit of things that truly matter. Financial freedom is not about luxury. It is not about supercars or mansions. It is about the ability to walk away from anything that does not serve your purpose. It is about the power to say no to toxic environments and yes to projects that inspire you. It's about owning your time. That is the greatest luxury on earth. Being able to wake up and decide for yourself how your day will unfold, without answering to anyone or worrying about a monthly deposit, is the ultimate form of independence. Don't spend your life working for money. Build assets that work for you. Change your mindset, shift your habits, and start the process today. The world is full of opportunities for those who are willing to stop chasing the paycheck and start building their own financial foundation.